welcome to our Not So Live, Not for CEOs broadcast with Credit Union Times, sponsored by Co-op Financial Services. Thank you very much for being here. And I want to also thank our panelists for being here today. We have a very great panel here. Teresa Halleck, CEO at San Diego County Credit Union. We also have Greg Barnes from One Nevada Credit Union. And we have Carol Payne with us today from the California and Nevada Credit Union Leagues. We are coming to you, we are live, believe it or not, from Las Vegas at the California Nevada Annual Conference. We normally take questions via Twitter. We do have a couple in so far, so we will get to those. But unfortunately, we are having technical difficulties, so we weren't able to live stream today. So one of the things we wanted to do with this program, Not for CEOs, is to encourage younger credit union executives to start and continue a career within the credit union industry. And so we're going to talk today about the importance of the credit union philosophy to the business of credit unions. So I'm going to start with a fairly simple question, I think. Why do you do what you do? If you just go down the line here, Teresa.
Well, I love leading the credit union. It's really fulfilling to get a great management team together, to see us grow and penetrate our community, and know that the financial products and services and the education we offer in our community helps people save money. So it's just a really good feeling to know that you're part of that and that you can put together a great management team to achieve all those goals.
Great.
No, I feel the same way, and what always gives me great satisfaction as a marketer is when some program or campaign that I put together provides Nevadans here in our state a home or a car, something that they didn't have before they were introduced to the credit union and the credit union movement. So, you know, what makes me very satisfied is when somebody who probably couldn't afford an auto loan or a home previously, before they were introduced to our credit union, now they can. And so it's a great feeling.
And for me, as a trade association executive, it's really wonderful that we have an opportunity to assist all of our member credit unions in the state of California and Nevada in reaching their full potential, creating marketing campaigns that let consumers in America know the value of credit union membership.
Absolutely. Thank you very much. Now, how important would you say is the credit union philosophy to the business that you're in? Teresa, again?
I think it's very important. The distinction between a credit union and a bank and our giving back to the community and supporting people and helping them save money, the people helping people philosophy is what makes us different and makes us not B of A, makes us not Chase or Wells Fargo. And so to me, it's the most important thing we have, that distinction and making sure that we live it when we approach our communities.
You know, each credit union is a little bit different about how they go about credit union philosophy. And what is credit union philosophy for each individual credit union? We always like to say people helping people, or where people needs more than money. But you know, these days I think it's totally changed. I think technology has brought banking into the forefront, where it's almost machines helping people now. You know, does your smartphone have the same interaction with you as a person? And so I think that's something we need to talk about is how do we balance the technology and the people side, so that the value of credit unions is known when they're interacting with the device that doesn't really talk or speak back to them.
And to your point about machines helping people, how does that affect how you carry out people helping people?
I would answer that with the founding principles of credit union cooperatives. And it's really about being a family. It's about understanding a relationship with those who you are engaging with every day. You know, when you deal with your spouse and your children, you embrace them. And I think credit unions go beyond that technology of that mechanical sphere and look and embrace those members who come into their financial institutions. They engage with them on a personal level and know about their family and what their challenges and commitments are in the community. And I think that's where we make the difference. That's where we one-up the technology and care about the people.
Well, yeah, I tend to agree with that. I think we have a little difference of opinion. These days, a lot of our members here in Nevada don't go to a branch. So that interaction with the person isn't there, so we don't have the opportunity to show or tell them about the credit union movement. Once they sign up, a lot of our members never ever come back to a branch. As a matter of fact, we have 65 ATMs right here in Las Vegas, And on payday, members get their checks, they go make deposits at our ATM machine. But you know what? More members now make the deposits through our smartphone, the mobile check deposit, than they do at an ATM or actually going to a facility to talk to one of our FSRs. So I think the landscape has changed dramatically.
I totally agree with you. I know the landscape has changed, but I have children that do that, and that use only technology. They're tweeting and using Facebook and sending a photograph at the same time. But I think also they also need to understand when something impacts them greatly and they're online with that financial institution and they say, well, we can go anywhere. We have a choice of going anywhere with mobile technology, we can. But if you have a relationship with that financial institution, so you have to grab them when they first come in. I think that's what the credit union challenge is. The first, point of contact and coming into that financial institution is eye-to-eye contact, making that relationship with that individual and ensuring that they are going to say, this is a place that's going to care about me. And yes, I could go anywhere with my technology and do that, but yet I'm going to go back to this one that I feel that is specifically geared toward my goals and my objectives in my life.
Well, in the technology now, live chat offers you the ability, and we do that, to proactively reach out to somebody on your website, board member or not, and let them know you're there and you care, to see if you can help them so they don't have to be physically face-to-face in the branch anymore on the phone. So
right, because anyone can come up and say, I need money. I'm going to go on and I'm going to go into my account. Oops, today there is no money, so now I need to talk to Teresa. I'm having a little problem, and I need a little assistance. You don't have that relationship. You're just a number. You're just, a person. Everyone runs into financial difficulty at one point in their life, and if they don't run into financial difficulty, they still might want some investment advice. So I think, I'm not saying that that's specifically going to answer your question, but I think that gives those financial institutions that opportunity, and I think credit unions are different than banks in that they care about doing that more so than others.
Yeah, I tend to agree with that. We provide the technology to members who may not be able to get it from a bank or another financial institution because maybe they're not qualified for it, or maybe they can't afford it. So you're right, the credit union can provide those things to where other banks and other financial institutions may not.
Right, there was a credit union, I cannot remember the name, it was in the South, and they were the first to come out with, like you said, Teresa, the online chat, but they had a woman that walked out, and she was bowing on the screen and saying, I'm here at your credit union, and it was so humorous and so funny and engaging. It's something that a bank would never do, and it was just so different and out of the box that it engaged not only the people in that immediate community, but those surrounding communities, and so they had a 20% increased market share of doing that type of a campaign. So from a marketing standpoint, I know you could appreciate something like that. So.
Absolutely.
So, especially in California and Nevada, the last few years, the economy, the competitive strains, I would think have put a strain on the people helping people philosophy, or maybe it's bolstered it. I don't know. How would you all say?
I don't see it having put a strain on it. I think it's given us a bigger platform actually to reach out to the community and try to draw the distinction between us and the bank. So I look at it as actually an opportunity to do that. Many examples, but the big banks were known for taking forever to do workout loans. The credit unions that I've been associated with, the ones I know of, turn it around very quickly. So I mean, if you kind of start going down that path of, yeah, it's been a tough economy, but if you look at what credit unions have done to help the local communities versus how big banks handled it, I think it again reinforces why we add so much value.
Yeah, I agree. We're offering more products now and turning them faster than our local bank friends. And we have things like in Nevada, payday loans that are cheaper than what they can get somewhere else. Some types of loans that other credit unions may not want to offer. We're doing a lot of Part 2 refinance. Provides those underwater homeowners to at least refinance at lower rates. In financial education, we did a lot before the recession. We're doing it differently now after the recession, but we try to get those members who are struggling, especially in our economy, in to teach them how they can afford financial services.
I And I think the economy afforded credit unions an opportunity to elevate themselves as well. You know, the bank transfer day, bringing it to the forefront to consumers of saying, oh, the billion, trillion, gazillion dollar banks, you know, as opposed to the community credit unions. You know, when you go to an institution that's right there, I know you're saying the technology, but those that are the brick and mortar places that are right in your own community, and you say, yeah, you know, they're committed to this community. They sponsor Pop Warner. They do those types of things. I think the economy brought it more so to the forefront, I think.
Well, I think too, I mean, if your consumers don't just use one channel usually. I mean, they may know the branch is there, but they know they can do all their banking on their computer at home. So, I mean, that's how I am. I don't, my tellers don't know me.
But the difference with the credit unions that are based in a community, and like our smaller credit unions, our mid-sized credit unions in the state of California and Nevada, they engage in community activities.
Right.
So when you go to the Pop Warner game, or the Little League baseball game, or ASO soccer, that credit union, Teresa's there maybe, or maybe one of her staff members is there. And so you're not only seeing them in the context of being financial managers and planners, you're seeing them in your community as a part of your extended family. Mm-hmm. So I think it's I think the economy has pushed that a little bit more and allowed that opportunity to expand.
Thank you. Now I'm going to switch over to Dave here, Vanna, to ask a question from our Twitter feed. Dave, do you have any questions?
We do. One of our guests asked, how can credit unions remain true to the credit union philosophy and still compete for the consumer business, for the consumer customer?
Go for it.
You know, I think it goes back to what you said. It's, you know, each credit union has to embrace the credit union philosophy in their own way and how they establish their brand and their connection with their community. And going back to what Carol said, you know, for example, we give back to over 75 nonprofits in the local area. So we're well known in the community for doing that, and we get a lot of positive, you know, community feelings from that. That's part of our staying true to the philosophy of giving back to our communities, but it's also the behind-the-scenes things, like we talked about earlier. It's the personal connection, whether it's through live chat, whether it's through you know, the personal warmth in the branches or the call center when somebody comes in, that they don't feel like they're a bother to us, that we actually care about why they're calling in and want to resolve their problem. Those kinds of things add up, and I think, you know, if you try to look, in my opinion, if you try to look at a philosophy, it has to be X. I think that's pigeonholing us as an industry, and really have to look at each credit union needs to establish their brand and how they're going to live their philosophy. And it can be different depending on the community and the community needs. We're big on nonprofits and giving back. We're big on supporting big things in the community, like the San Diego County Credit Union Holiday Poinsettia Bowl, you know, sponsoring local games and having our signage there to keep reminding people they have alternative financial provider. But I think each one has to make its own decision and live by it to be consistent with its brand.
And I think that now more than ever, people are interested in, you know, wanting to know more about credit unions than ever before. When you hear about them on the Dave Ramsey show and on CNBC, I mean, venues that would have never talked about credit unions years ago. So when you ask about the competitiveness of credit unions, I think it's a great time to be in the credit union movement. Our brand and our name and everything about credit unions, everybody's interested about it. Like you mentioned, Bank Transfer Day last year. I could have ever seen that years ago. You know, our credit union didn't even do anything for Bank Transfer Day, and we had a whole influx of new accounts. So competitively, I think we're in a really good position right now.
Right, I went to an Angels game, and we had a group of people with me from my mom's retirement community, and they were all laughing because they said, look at the signage of this, says credit unions for people not profit. They said, credit unions are really getting to be known. And I'm like, yeah, we've been around a little while.
It's been 100 years, right?
So.
Now you all have brought up, I think Ray in particular brought up Bank Transfer Day, and you also used the term movement. Bank Transfer Day really was a grassroots movement, and when credit unions started, I will agree, they were a movement. Are credit unions still a movement today?
I wouldn't think so, in the sense of what they were back in the olden days, where it was Dad's credit union, and they were operating the credit union out of a shoebox in the back room of their employer. That type of movement is probably not accurate these days. But in the industry of us offering a different approach of providing financial services to people who don't want to get charged as much in other places. I think there is a movement. I mean, I think we're all in this together. We're all trying to really provide services to people who can't get it or are charged more for it elsewhere. So I think in that sense, yes, there is. I think
I think the movement is actually very strong, and I think the movement, just like as Teresa was saying, you can't pigeonhole philosophy. I think you can't pigeonhole the movement, because the movement is emotional. It's an emotional attachment to something that you really are committed to and care a lot about. And so bank transfer day, case in point, it became a movement because it was an emotional, people were like, yes, I'm struggling, I'm having a difficult time in my life, and I want to go to a financial institution that's going to care about me. So that is emotional. That's an impact on your daily life. And yes, it's not like an industry, the credit union industry. It is a movement. Not always, and not in every circumstance, but in different time frames, when different circumstances, coincide, I think it can become very strong.
I would agree with that. And Javelin study that came out not too long ago said 11% of bank customers are thinking about changing their financial institution. When you look at the big banks, B of A and Citibank were at the top. They were 20% or higher. And then you had Wells and Chase not too far behind in the teens. When you look at that, I agree, it's emotional, and really people are starting to think about it. They're starting to think about credit unions as the alternative. If we could just get them over that hump of the inconvenience of getting away from the sticky products we all want them to use, because the banks did a real good job of tying them into the bill pay and ACH payments and all that stuff. It makes it a little more difficult in their minds to move, even though it's really not. So that's really our challenge with the movement. Social desire to do the right thing and be behind socially responsible organizations, I think, is definitely alive and very strong and growing.
And that's, thank goodness we have Co-op sponsoring this session, but Co-op Network with their ATMs are growing and expanding with shared branching. And so there's, at least credit unions are looking at different opportunities that they can do in the future that's going to bring those individuals into the fold.
Yeah, and just the cooperative aspect of the Co-op Network. I mean, you don't see a lot of large banks or other types of financial institutions gathering together to offer those services across the nation.
The very idea of a QSO is unfathomable.
Or even the shared branch concepts. And I think it's just so interesting. People say, you know what, credit unions, you're a lot like community banks. I said, no. Community banks are a lot like credit unions. You have that sort of backwards because, if you look at the banking industry in California and Nevada, for example, the credit unions were in those communities before those banks were. And they were large banks and said, oh, I guess we'll put a branch here in this community, maybe we'll help out. But yet there was a credit union that was there before that large bank that individuals knew about. So.
And the credit union's there without having to be there, whereas the bank often is trying to earn its CRA credit for being in a particular neighborhood.
Yeah, with their low income designation, that's huge too, important too. Banks don't look at that sometimes until they see the credit unions movement moving to look at those industries and say, oh, I think we better do that too. And they have the resources and more funding to, blow us out of the water with advertising and marketing. So.
Dave, let's go back to you. Any more questions from our Twitter feed?
This is an interesting question for one of our guests. Does the credit union philosophy equal and look at only those with modest means, or do you also have members and drive to get members who also earn high incomes?
Well, I'll happily answer that one. We would embrace anybody. Bill and Melinda Gates are welcome to come open an account at our credit union, and we can make that happen. No, we of course want anybody who will benefit from us. I mean, we have a community to serve. We're not looking to serve a slice of the community. And to the extent we have people who have high incomes and bring that kind of balance to the credit union, it helps us carry the people who don't have those high balances. It's kind of the 80-20 rule. If only 20% of your members are profitable, they're carrying the other 80%. So of course we always open the doors and welcome anybody in that will benefit from us. But those people do help carry the rest of the members who are not as fortunate. That's a good thing.
I agree with what Teresa said. And here in Las Vegas, 60% of the people in this town have poor credit scores. So we're in the unique situation where a lot of the folks that are in our market aren't high net worth type folks or people who make a lot of income. So our strategy has been to find products and services to help folks who are struggling. But of course, we like everybody, and we'll take anybody at our table.
And the benefit for the credit union, I'm talking about the philosophy, is that they are member owners. And so they have a vested interest, even though they're putting their funds into that credit union, they are now member owners and they're a part of that whole. So they should feel, like they've just made an institution stronger, but it's an institution that you own. And that's different too.
And there was a talk, I was at the Korean Water Cooler Conference back in Nashville last month, and Keith Leggett from the ABA got up and spoke. It was very interesting. He talked about credit unions losing their souls. And that idea that, you're pushing for supplemental capital, you're pushing for business lending, credit unions aren't serving the members they're supposed to be serving. They aren't serving those of modest means, which of course the banks love to push that part of your membership. What is your response to that?
Well, my response is that, of course, the bankers are always going to promote those types of falsehoods, and that's really great, except if you look at the facts. And as I recall, the facts are we didn't have a cap on business lending for HR 1151, and it was artificially imposed on the industry. And going back over time, business lending is one of the original fabrics of this industry and what started credit unions. So to suggest now that we've lost our soul because we're also finding that there's a need in the community to do even more business lending because the big banks haven't done such a great job is disingenuous at best from my perspective. And I think that also goes back to supplemental capital or anything else. As we grow as an industry and as the economy changes and regulations change, we need the tools that keep us alive as an industry and allow us to succeed, to continue to provide service to the many members of our community who are not finding what they need with the big banks and are looking for alternatives. So it's of course the bankers are going to say that. Why wouldn't they? As long as you don't look at the facts, it sounds good on the surface, I suppose, if you're a banker.
My answer is yeah.
What she said.
What she said.
Well, things have changed. The economy has made credit unions change. A lot of them weren't what they used to be. But we still don't have shareholders.
Right.
We have members who are owners. You can't raise capital that way. And a lot of credit unions still have open elections where you can vote by mail or ballot or online. Some of them have changed that a little bit. But still, there's no bank that operates in that fashion. We're a member-owned, not-for-profit cooperative who has members and not shareholders, and there's nothing that any bank can say about that. So.
And as Leo Shapiro said, the father of the California credit union movement, and he said there's little lighted candles, and they light those candles to lend to others cooperatively, and not for profit, not for charity, but for service.
Right.
And yet, credit unions were always committed to service. I'm sure the bankers would say that too, and I think there are some good banks. There's small community banks that do a good job. I'm not saying that because you have to give them their due, but they still copied the credit unions first.
Well, if I could add, Mr. Leggett needs some way to divert attention away from the industry on his side because B of A and some of the others have gotten hit with huge penalties. The hustle was one of the most recent things on the mortgage where, they inherited a problem child institution and failed. But, the banks have been notorious for not doing the right things by the community. And so, I'm sure if you can divert attention away from the negative press on the banks right now to calling some attention to credit unions in a less than positive light, he thinks he's probably doing his job well. But.
Well, in this economy, I think they have better things to worry about than beating up the credit unions.
And now they have to worry about laying off all of their employees in several communities where they didn't really care about, they just wanted the presence and infiltrated those communities, but now they're having to cut back on their staff and laying off hundreds of employees.
That was a recent article in the American Banker about, I can't remember the bank now, but they were laying off like over 1,000 of their mortgage loans. They're looking at it anyway because the refi boom is kind of going to be in slow.
Right. And it always amazes me that, bankers say, they're caring about the communities, but yet in a community that I live in, I watch a Chase being built and a Bank of America in the same shopping center. Mm-hmm. And I said, okay, are they just still competing with each other too? So it's really about the revenue that they want to generate and not so much, I think, about what's right for that community.
Right. Well, and even as a credit union, though, you have to generate revenue.
Absolutely.
So, sometimes there must be a hard line to walk between doing what you want to do under the credit philosophy and, doing something that makes business sense.
But it's the how.
Sure.
It's the how you do it. That's what makes the difference.
We've had to make some changes in this, in the Las Vegas area, with our members in the economy, and worst foreclosure rates in the nation, highest unemployment. We've had to make some very difficult decisions that affected our members financially. We've had to raise revenue where we thought in areas we would never touch. Fees, and more fees.
Well, I remember your credit union actually paid high-end depositors to take their money out.
We did, yeah. We were getting to a point in our capital ratio where we was getting to lower than what we wanted it to be. The NCUA was getting a little nervous, so we did ask some of our high depositors to take their money somewhere else. We paid them to do that. We did that in the credit union way. We gave them money and incentive to go somewhere else.
Right.
But it was how we said it. It was the story we told to them that made that as successful as it could have been.
And it's also a symptom of the restriction of the capital that credit unions are permitted to access as well.
That's true. There weren't other opportunities for us to access other capital. So we did what we had to do. But going back to the fees and raising revenue, it's difficult. But members still have to support each other. Some people have to pay a little bit more to offset those who aren't paying their fair share. So as a cooperative, it's kind of a little bit of how we go about it.
And it's the not for charity part of it too.
Right.
It's a fine
those
line.
words really are still effective today, not for profit and not for charity,
Yes,
but for
yes.
service.
Everybody
Because you're not doing it for charity, but you're there to sustain yourself as an entity and to serve that community. So yes, they're going to diversify their portfolio. They're going to try new technology and new tools they're going to continue to generate new products and new services, to increase loan growth and increase member engagement, whatever is necessary to make that entity be there for service.
Dave, do we have any more questions from Twitter?
We do. What are some of the creative ways that credit unions are earning revenue while at the same time providing financial education to your members and also providing other types of services that lead to that financial type of education?
Well, I can provide an example. We have a well-known local economic speaker that comes in and educates the community. So people sign up for our seminars and they come in and they hear him speak. And we have been known to do things like give the attendees a coupon for a discount off of a product we use, such as a mortgage loan. And so we're drawing people in because they want to come hear the education, but then we're giving them also a benefit to help introduce them to a product that they may need, especially if it relates to the topic that they want to hear about. And then, of course, that product is a revenue provider for the credit union. So providing the education, they don't have to use our products and services, but hopefully they will. And if they do, they get a discount for having also come through our educational process.
And as a trade association, we're going, even here at this conference, we have it, it's Bite of Reality, where we're going into communities at local area high schools and putting on financial literacy educational training and real life educational training where the students come in and they get a checkbook and they get a budget and they have to walk through the process and they even run into mayhem and they have to figure out how they're going to plan their financial future. And having that real life hands-on experience is beneficial to the parents who bring those children, to the educators who are teaching those children, and it's been very successful.
Our credit union, as I mentioned earlier, is independent lending here in Las Vegas. The sad reality is that there is a payday loan store on every corner, just about. Even here on the Strip, you can walk a little bit that way or that way and see one. So we got into the business of doing quasi-payday loans to a creative way to make some income, but it's cheaper than what they'll get charged somewhere else. So our product, we actually I forget the fact, we save our members more than we actually make on the product because our fees are so low. And we offer financial education to those members. If they go and take the balance tutorial online where they can go and learn about how to manage their finances, we will give them $25 cash right back into their account to help pay off that payday loan. We also have what's called Break the Cycle loan, which gets them out of the cycle of payday lending. So they can do it on the first loan or the second loan. We don't let them roll over the payday loans more than 3 times. But we get them into that Break the Cycle loan so they can pay it off over 12 months instead of just every 2 weeks. So it's in our market, we've tried to be a little creative in that space.
Any more online? Okay. I want to ask one last question. In your credit unions in particular, what stands out to you, and in Trade Association, what stands out to you as the quintessential symbol of the credit union philosophy within your institution?
Well, at San Diego County Credit Union, we sponsor and have, since its inception, San Diego County Credit Union Poinsettia Bowl. And that is the week of Christmas that we have this bowl that comes into the city. And the week of Christmas and the week between Christmas and New Year's are the slowest 2 weeks for the city of San Diego as far as tourism. And tourism is a very large part of our economy down there. And so this bowl was created to bring capital and economic activity to the city during the slowest point of the year. It brings in millions of dollars of revenue. We fill up hotel rooms and restaurants, have more business, and the people who depend on the tips and all of that stuff certainly have much stronger jobs as a result. And so that's one of the things we're the proudest of is actually, yes, we're the sponsor, the title sponsor, and our name's on it, but what people maybe not realize is the back end is it's bringing huge amounts of revenue to the city. Every year people come and see us, it fills up hotel rooms, and that helps people in our community keep their jobs. So that's very important to us.
Yeah, for One Nevada, our philosophy is a little bit different. I think our brand and the suite of products that we offer for people in Las Vegas is what makes us different, and is kind of how we form our credit union around the credit union philosophy. Providing services such as checking accounts, payday lending, first-time home buyer loans for mortgage, specialty auto, which is lower credit auto financing. We've kind of built that brand here in Las Vegas and up in Reno and over in Pahrump, which is a small town that way. So we're kind of seen as, I hate to say that we are seen as a second chance credit union, but giving Nevadans a second chance credit union is a little bit better. So that we've kind of built that up as our brand and local community.
For a trade association, that's a difficult question.
Right.
But our brand, and when we moved into our corporate headquarters in Ontario, I thought about that. What would I want the community to see in the Inland Empire in San Bernardino County, where we're headquartered there, and we have offices in Sacramento and Washington, D.C., of course, but I wanted Credit Union Center up on that building, where anyone passing along the freeway would just see the name Credit Union, just to make it a subliminal, subconscious mindset. And whether they would come into that building or not, because there's no credit union inside the building physically, I just wanted them to see it. And my neighbors did. They said, credit unions are that big? That building's huge. And I knew that's what they would think. It was just to get it in their mind that, yes, they are strong financial institutions. Yes, their name is at the top of a lot of buildings, not just Credit Union Center in Ontario. You know, so start looking for that. Start looking around and look for the brand of credit unions. So I would say that's simple. It's strongest in my mind.
Well, thank you very much for the panel here today, Teresa, Greg, and Carol. And thank you all to our audience at home that will be watching this recording in a couple hours, hopefully. I want to thank our sponsors, Co-op Financial Services, for sponsoring this event, and hope that you all will be around next quarter for our next Not for CEOs event come March. Thank you very much.